Good morning, everyone. So, short-term interest rates continue to rise. We pointed this out about a week or so ago, and it was a heads up that things were changing as far as the Fed, everyone believing they were going to pause. And so the markets tell us, what's likely to happen. I think I saw a story, one of the Fed, the woman, I forget her name anyway. I think it was today I saw something, her saying, there's no reason to pause. So I guess the markets are starting to come to grips with that and what may happen with that, with the slowing economy and recession, which I think inevitably, I believe it was already here for a while, but I'd rather get it over with and have some kind of correction where things get cheaper, especially these tech stocks, which will present us with a buying opportunity. Okay, so spiders gapping down below the red bar there. There was a little gap up. It didn't gap and clear the high, but we had that minor gap up yesterday, and things came in and just kind of sat there all day. It was a go nowhere kind of day, and now you can see where there are. Gapping down pretty well below the that red bar, and we got that little green box there from yesterday as to a level to kind of hold in that area on a closing basis. The idea being, the deeper it moves down into this area, which is a void, the greater the probability that that breakout fails. Now, with the gap down we have today, unless it immediately reverses back up again, I think, as the heading says, the title, the bearish gap marks a short-term top. We'll see whether that happens, but we've got interest rates going up. We've got the dollar, which turned down yesterday, a little bit of a gap down. Now those dots, we don't get much data, but that's gapping higher. And see what the 10-year is. Well, that's coming off of the low, but pulling back. The 30-year, I think, reached, up there, the prior high. So they're pulling back a little bit. But you'll also, and this market's ignored this for the longest time, but you can see these yield curves just moving wider again, and which has been a great, source of information as far as recessions. And if you remember, sometime in 2022, we did have those 2 quarters of negative GDP, and then things have improved again, but these yield curves never did. And so, markets have been, I guess, okay. It's been a stock pickers kind of a market, but for the most part, it's been a lot of chop, and I would say more of an unpleasant year as far as trending, and other than for a few stocks. But it is what it is. I think the sentiment is skewed data. I don't think this is right because it closed yesterday, the day to day, at a pretty high level. And I didn't see the equities do that. I'm going to check on that at the site and check the data. Also, I wanted to point out over the weekend, I did in the letter, I wasn't really clear on it for those of you that get the letter, but I was pointing out what was potentially forming as a head and shoulders top in this day-to-day advancing stocks minus declining stocks. And I've seen historically where, that has given me a heads up as to more bearish price action coming. Now, the breadth has just been awful for the longest time. I can't remember it being so negative for such a long period of time while the markets kind of was grinding up, especially the NASDAQ. So, if this does turn out to be a top and we see a bigger correction, and at a minimum, I think we're going to have to see this punch down through 41. This market was going to come in, but it's just refused to do that. It's been resilient. And, pointing out this weekly chart, which is still bullish. breaking out. But how more bearish could something be that breaks out? And ultimately, if we see that it's down here at the end of the week, oh, so checking. Okay. Just reading comments there. All right. So the dollar up, and of course, the euro is getting killed. That goes down, and it's got room to get down toward these prior lows here. We pointed out the slowing momentum back there in April. Excuse me. The positive side is these semiconductors have had a hell of a move and they need to rest. But when they go vertical like that and gap higher, many times it's an exhaustion gap. And that was the theme of yesterday's pre-market review of, this gap up, marking a short-term top. And now we get, this gap down. And you can see where the data is right now, gapping well below that bar that gapped up. So bearish formation, the idea, short-term top. Okay. SPX. Either side yesterday would have worked. It was relatively narrow range day. And yesterday, the high side I thought was the no-brainer. Either side would have worked. But this is too close. Even though this is gapping down, I think that's too close. And the 41.35, I think you've got below the low of the wide range bar. Could it go there today? Sure. And it's below this bar here, and it's support. So even if it would have to drop pretty far to get there, and if it did, just because of where it is, I think it would bounce back up again. So the downside is more attractive than the upside, even though we are getting a gap down. And Qs, obviously, the run up like that, the gap up, and now gapping below the red bar, kind of I think I'm not sure, abandoned baby, some kind of candlestick term. Either way, it was a vertical run up and a gap up, and now a gap down, and just leaving a bar there, abandoned, so to speak. And so that, bearish, marking a high, but it's still an uptrend. There's plenty of room for this to fall and still be okay. That's the good part. One of the things that I like to remind of is that in situations like this, this has got plenty of room to pull back. We'll see what the S&Ps look like. We want to see what financials do, to see how much they pull back or the lack thereof. Do they hold up here? That's not doing anything. But when markets correct, what's happening underneath tends to be pretty significant, meaning individual stocks can get whacked 30-40%, and the market may pull back 5-10% or whatever it might be. So just be aware of that. You don't want to get stuck in something that just really hurts you financially. All right, so topping pattern, you can see this head and shoulders kind of a top, new high failure, upside shakeout, call it what you want. It's a bearish pattern, and it's got room to fall. Russell's been doing nothing and continues in this sideways base, and whatever correction does unfold, we'll see whether it holds this or not. So pretty significant areas of support. The transports have been dead for the longest time. The airlines looked pretty good, and some of the cruise lines. And now I'll be interested to see how they hold up or not. But just looking at the index itself with all these moving averages converging right over the top of prices, it's just not an attractive pattern. S&Ps, I think we looked at or not. Little breakout failure. One of the things to point out is, this really hasn't had any real momentum, strong momentum, but see these highs so close together, as it forms, just a lack of any real power there. So, really tight. And you see the last time it just peekabooed above here and fell all the way back down again. IM has been the worst. Every wide range bar has failed, and this one's beginning to fail as well. And so the other side of this is that being the worst, and we'll see how far things go as far as a correction. But this is likely to be what bottoms out first, since it's been the weakest. And I don't know whether it'll hold this level or not. I guess we're just going to see together. But it does have room to fall down there where there's a significant support level there from earlier in the year. And I think that is the low of the year, as you can see. And gold's moving up a little bit, and I suspect. Why is it up? The dollar is up, and this is gapping up. That's interesting. And it's holding there. Markets do things that don't make sense, or they don't have the relationship. I thought that with the dollar moving up, this would have been moving down, but it's not. And silver is up a little bit. Well, not really doing much of anything. So I don't know. I have to look around, see why is gold going up. There's probably a reason for it. And Bitcoin. What is this? I see. Okay. So it broke out above this little range yesterday, coming into the other part up here. I don't know. We'll see where this is going. I mentioned before that got a somewhat pretty good relationship with the markets, and so the market's moving down, this moving down. We'll see what happens here, whether that everything begins to fall apart a little bit here. That's it for me. All yours, Dan. I can't talk anymore.
Good morning. We talking about the market top. So we just sold the opening price yesterday in the XLK that we had, because that one was the most extended in our ETF trader. So that was perfect. It was a gap and crap candidate. So I mean, you could have squeezed a tad more out of, but that's not the way we manage that. In Qs, we had a beautiful 0 DTE trade. When it came in and tried to bounce and failed. Today, MT Live, we have a great section on option fallacies, buying and selling options, with examples, with proving why so many of those fallacies are just idiotic talking points. The one I'm thinking of right now is one fallacy is never ever buy or sell short-term expiring options. And that's just a ridiculous statement if you know what you're doing. And we'll explain that today at noon. Rocco, or Thomas rather, AAL, Greg left off talking about airlines, is increasing guidance. And as soon as they did that, look, I was watching 3 here from yesterday, right up here. As soon as they did that, my UAL alarm went off. I had it at 48.60. And this was the best looking one yesterday. So I had UAL. I'm down. Didn't like the UAL's better. We always have what I call the A/B test. we look at two stocks trading candidates in the same sector, and we say which one's better. And ALK, C is still in yesterday's range, also got whacked. So UAL still looks the best to me as of those. I haven't scanned the whole sector yet. Earnings trades here. I didn't do any myself yesterday. Hewlett Packard. That's pretty good whacking. You know, again, I don't care about numbers. I care about just putting a horizontal line. So look at that horizontal line. And just, we don't use fibs, but that's an 80% bearish gap after a breakout. So that to me is like a multi-week high. HPE 14, that's even worse. Look at that. 1406 gap into this prior low. So that's 100% retracement. That is a major shock pattern, but I don't know what to do with it. Oh, UAL. Was this earnings today? UAL? Or did I post that wrong? Yeah, 719. Sorry, so I just typed it in here incorrectly with my earnings stocks. AAL 1507. Yeah, but John, it's getting right to this prior high. So now that's 100% retracement to resistance. So again, UAL is superior of these few that we've looked at. So how would we trade this? Well, like any other gapping stock, let's put it in a 5-minute window and see how it sets up. So I will do exactly that on my other computer. And then, you know, if you don't get that pullback because it's too strong and it didn't run too much, then another default is this 30-minute high. All right, YouTube asking about PGen over yesterday's high. Yeah, it's a buy setup. It was a bottoming pattern. It got smacked as a bottoming pattern, but it's, you know, sometimes I call it the second go around. So you have two bottoming tails, made a higher low at the 50, and it's, you know, percolating a little bit here pre-market, showing relative strength. So if it's a watch. Tauros, the DAX index was. All right. Yeah, I don't get the futures. I don't know what the ETF of the DAX is. Oh, where did I leave off? Box 2850. There you go. That's a 30-minute high candidate. Gap breakout from multi-month bottoming pattern. Going in a window. Box. And 67. That is ugly gap. You know, that's a gap that's destroying this pattern. Because otherwise the monthly was setting up as a nice bottoming retest. But earnings gap is whacking it out. So it's a bearish gap. I mean, I think it's a real company. So we'll see if buyers see this as a gift. I remember this SE I also had as a 4 long watch. And this earnings totally killed it right here. That's steady, ugly pain. I'm actually surprised the volume hasn't been increasing on this sell-off. There's a lot of Climos out here. Climactics. Greg mentioned Nike yesterday. Target I've been watching for a couple of days. I still am. They'll reverse eventually. They'll the lower it goes, the better. And Goose, you know, that was a real gap. That was an earnings gap. That's what we call a bullish gap that varies. So that chart is damaged all time frames. And why? Gapping up a few pennies here, no pattern. The China stock. Ideally, this will give us an inside bar in the lower third. And then we short it as a 1, 2, 3 tomorrow. This crazy price action. Wow, look at this bar and volume into earnings. Wow, somebody was wanting to get into earnings. It's opening flat here, so API. Okay, well, I don't short stocks myself. Like $7 is kind of my limit unless you're just day trading. If this were not a $3 stock, today's Wednesday, I'd say shorted under last Friday's low. That's bearish, daily, weekly, monthly. But I'm not messing with it. And this thing gapping down, that also looks like a death trend, daily, weekly, monthly. BTCM, I don't like the overlapping bars. Light volume. I left it on the list just in case maybe they wanted to gap up to 320. And then it could have had, you know, 30-minute high. Maybe it could have gone to $4. SMCI. Sure. Yeah, there's a lot of in the semis and AI space. Yeah, look, I have NVIDIA here on my list for the same reason. It's not a clean climb just because, you know, we don't have the 5 fluid bars, but it's gapping under yesterday's low. So that's making that a bear island reversal. So that is a call spread candidate for Friday. Marvel, the same. I mean, look at the distance from the 20. It's just crazy extended. Now this, see how it's gapping down here and going sideways pre-market at yesterday's low. So that's kind of a big old head and shoulders on the 15-minute chart. So that could be a beautiful day trade setup. 5-minute low, 10-minute low, just, you know, make sure it can't bounce and the market can't bounce. But that's a beautiful day trade setup right now. Short, put it in a window and see if our bias comes to fruition. Hess alarm. I had this as a short idea. My alarm just went off. 126. Where did we leave off? House. No volume, no pattern. BCI, same. CAE, gapped up coming in. That's sloppy. AAP, another disaster du jour today. Man. Wow. When I had to blow up this chart, man, I can't even see support on the weekly chart. Okay. All right, so 75 to 80 on the monthly, all the way back to 2022. So this, let's see where buyers step up. That is one ugly, nasty gap. Capri gapping down 38.50. There's a 30-minute low. If that can't bounce, short 30-minute low. Talking to Capri is, I think, isn't that a casino? I got Caesars here on my short watch list. Look at that bearish. You know, that's that's our proof that it can't bounce with yesterday's range expansion. What's LOL Capri mean? All right, so Caesars I still like on Fro. This was actually a potential. It's close. All right. There's 1425. But now the gap's whacking it out, so nothing to do there. With oil down. Charlie Delta 540. It's a gap and a downtrend. Echo Hotel trading range doing nothing. Big Z. That's bottoming stock I was watching yesterday. Figs. I think Sam mentioned this, but it's right at the gap fill. We can find better. IGV. Why am I watching you? I don't know. GTLB bottoming pattern over yesterday's high. Month-so alarm. Greg mentioned this yesterday. You can I'll reset the alarm 1475. That's a short idea. This Macy's here I just sent in Telegram is a short idea. That's a bear 1, 2, 3. Looks great. Stop last Friday's high. You can start off day trade, but looks good as a swing too. PCTY, Party City, we had as a short in the weekend letter. All right. NPO. Yeah, that's not a pattern for us for swing trading. 15-minute chart is bullish, but we don't trade breakouts that look like that.
That PCTY's got a $4.50 spread. Be careful.
Kidding. Holy cow. Let me tell him. Do you want me to cancel it?
Yeah, I mean, I wouldn't do it.
Yeah,
I mean,
yeah,
there's
yeah.
a pattern, but geez.
Oh, I'm glad you saw it. You know, I honestly thought and Alex is gonna laugh at me. I honestly thought this was Party City and they did a monster reverse split. PCTY used to be Party City. And so apparently somebody bought them or they went out of business, and now this company took their symbol, Paylacity. All right, so Party City is gone.